Hello and welcome to this week's special presentation. My name is Jim Penna, Manager of Retirement Services here at VectorVest, and I'm very happy to be hosting this week's topic, which is titled Using VectorVest to Analyze Stock Safety. Now for this presentation, I'm going to be revisiting two very important chapters from our founder and mentor's book titled Stock Strategies and Common Sense. I'm going to look at Chapter 7, which talks about stock safety, and Chapter 12, which is going to address investment styles and strategies. When I get into the program, I'll show you how you can download Dr. D's book right from the VectorVest homepage. So the beginning of Chapter 7 begins with Dr. D defining risk. And he talked about risk having two parts, right? The probability of an unfavorable outcome and the consequences derived from that unfavorable outcome. So simply put, investment risk entails the probability of losing money and the pain associated with that loss. Now, he goes on to talk about how each of us needs to know how much money we can afford to lose on any single investment. He used the analogy of the risk is extremely high. We may be very comfortable with buying a lottery ticket because we can afford the loss. Buying stocks, however, he said, is a lot different. We're using serious money when investing in the market, money that can make a difference in the way we live. So once we've established our tolerance for risk, we can then focus on assessing the risks involved with individual stocks. And so that's my list of goals for this presentation. Number one, I want to help you to establish your risk tolerance using the investment matrix that Dr. Diliddo talked about. We're then going to focus on assessing the risk of individual stocks. And then finally, we're going to go into the VectorVest program, and I'm going to show you how and where to find these safer stocks and just give you an idea of some of the performance we've had on these stocks over the last 6 months to a year. And we'll talk more about that when we get into the program. I remember when we used to go on the road a lot more for our seminars, I made the effort of memorizing a paragraph from Dr. D's Stock Strategies and Common Sense book. It's from Chapter 12, which is the Investment Styles and Strategies chapter. And he had written, and I had memorized this a long time ago, and he said that every investor has an intuitive sense of their own risk-reward profile. They feel it in their bones, and it should dictate their investment style. Speculators and traders, they thrive on volatility and they savor the thrill of making a fast buck, while conservative investors cringe at the thought of a capital loss and patiently reap small rewards. Right? So Dr. D noted that without knowing it, each of us has an investment style which is distinctly our own. And he finishes it by saying that the key to becoming a successful investor is in recognizing your investment style and then buying stocks which are consistent with that style. Right, so the VectorVest system of stock analysis identifies 4 basic investment styles, right? And these are arranged in this strategic investment matrix that we have. So I'll briefly go over each one of these just to lay out the idea here. So I'll start with aggressive investors. So aggressive investors are looking for stocks with a high relative value, which I'll define in a moment, and generally lower relative safety, right? Relative safety is not as important for the aggressive investor, right? They're looking for capital appreciation, and they're willing to take substantial risk to achieve it. Okay, so aggressive investors are often associated with the momentum style of investing, and due to the volatility of high relative value and low relative safety stocks, aggressive investors may substantially outperform the market over the long term. Next, we have our speculative investor. I'll go to. Now, the speculative investor, they're looking for big gains without regard to risk, right? The fundamentals of value and safety mean nothing to them. They buy stocks on hype and rumor and are, excited by price activity and volatility. Dr. D noted that the more nimble investor can make high profits in these stocks if they pay close attention to relative timing and to stop prices. But without a keen sense of when to buy and sell, most speculators lose money over the long term. Brings me to the conservative investor. Conservative investors buy stocks but don't like to take much risk, and they're primarily interested in capital preservation. And they're delighted to settle for just average market returns. So they're typically going to buy low growth, steady performers which pay solid dividends. These stocks are characterized by a low relative value and high relative safety, right? Because as we noted, the higher relative value stocks can be a little more volatile. So the conservative investor is focusing on the lower relative value and high relative safety, right? Conservative investors are virtually certain to make money over the long term, but they may not outperform the market. Okay, and then finally, let's talk about the prudent investor. And Dr. D defines the prudent investor as wanting the best of all worlds, right? We want high reward and low risk. The prudent investor is interested in outperforming the market over the long term and achieving annual returns greater than the sum of long-term interest rates and inflation rates, right? It was always that number that we look at for a successful and productive portfolio. Right? The best way to meet these stringent requirements is to buy undervalued stocks with consistent, predictable earnings. And so the question becomes, how can we find those stocks? Okay, from here, let's go ahead and talk a little bit about the process that VectorVest uses to analyze stock safety. Many of you have seen this stock safety checklist before. And so as a good review, I want to talk about what goes into the stock safety checklist and the important factors that Dr. D put into the proprietary indicator of relative safety, which we'll talk more about in a moment. First of all, the first factor was on the stock safety checklist is earnings consistency. Right? The largest risk that shareholders have is that the company fails to meet earnings expectations. So if a company has a well-established record of consistent, predictable earnings performance, it is much more likely to meet those expectations. The second factor Dr. D talked about was company size. He said it's true that stocks of large companies generally are safer than those of smaller companies. So larger size companies are not going to disappear overnight is the general idea here. However, Dr. D made sure to elaborate that investors should not assume that the shares of a company are safe just because they belong to big companies. Next, we talk about price behavior. And a great idea here that Dr. D put forward was talking about absolute price behavior, right? And how it provides an unequivocal measure of volatility when you're looking at the stock. He had discussed beta, how beta is how a stock will trade given against the overall market, whether it's more volatile, that beta could be higher or lower. But he talked about the absolute price behavior. And what he meant was since all things tend to move toward a mean, stocks which are well above their regular stock price moving averages are more likely to move down. So if a stock gaps up well above that moving average, it's likely to move down. And stocks which are well below their price's moving average are more likely to move up. And it's just simply called reversion to the mean. We talk about business longevity. It's better to deal with the devil you know than the one you don't, all other factors being equal. That was the bottom line for business longevity. Next is dividend history, right? When a company pays a dividend, it's perceived that the company has at least a good enough financial track record to pay that out to its shareholders. But as Dr. D said, a good company doesn't have to pay a dividend, but if it does, it darn well better continue to grow and pay that dividend because, as he said, there's no greater black eye for a company to have to suspend or cut their dividend. And then finally, there is the debt to equity ratio for companies. It really is just the balance sheet. Does the company have a strong balance sheet to be able to withstand any headwinds to the general market, to the company specifically? And that's what we look for, a good quality debt to equity ratio. Try to avoid companies with large debt, right? Because it's harder for them to sustain their profitability. So the difference between investing and speculating, right, basically is the difference in a matter of using knowledge to reduce risk to the point where the odds of winning are in your favor. So with that, the VectorVest proprietary indicator of relative safety is defined as an indicator of risk. It's computed from an analysis of those factors that I just went through, right? We take that information, that data, and we funnel it through the VectorVest program and all of the formulas and equations that we have to create our proprietary indicator of relative safety. It's on a 0 to 2 scale, and we favor buying stocks whose RS is greater than 1. Now, the other fundamental indicator that we use, and I just wanted to quickly mention it, is relative value. Relative value looks at the future. It compares price and value, takes a stock's risk and earnings growth into account, and it indicates the investment potential, right, of a stock compared to a similar investment in a AAA corporate bond. So it is another piece of the fundamental analysis that we do, and I'll illustrate to you the correlation between stocks with high relative safety. Generally speaking, that's why I love relative safety so much, is that generally all the other numbers that I care about are going to fall into place based on a high RS. Okay, from here, I'm going to go into the program, and let's take a look at how to take that information and use the VectorVest program to find these quality stocks. Remember also, when you're buying these stocks, we have to know how safe the stock is, but we also have to know that we're buying it at the proper time. So market timing and market trend is always important. Right now, I'm looking more at just the analysis of stock safety, but right now, all of our indicators are up. We've got green lights across the board. So VectorVest does advocate buying safe, undervalued stocks at this time. Okay, from here, I'm going to go up to the main toolbar, and I'm going to start in the Unis tab. And how do we find these stocks in the VectorVest program? Well, when I click on the Unis tab, it's going to take me into my search directory, and I'm going to focus on just a handful of searches here and give you an idea of how they performed recently. Just to show you how to find them in the VectorVest program. Now that you know how we analyze them, how do we find them? Let's start in the retirement folder. Okay, let's start here. So if I'm in the searches retirement folder, I'm going to come down, and I already have long-term winners RS descending chosen here. Okay, remember, when you choose a search down below, it has the comments, and it'll tell you, exactly what the search is designed to do. Well, here it can't get any more basic than this. We're looking at long-term winners RS descending. It's any stock greater than 1 with just 100,000 shares of average volume, and we're looking at no pink sheet stocks, right? That's it. And then the key, of course, is sorting this by relative safety in a descending fashion. When I run that search, it's going to bring, let me slide back over this way, it's going to bring stocks, again, with the highest relative safety numbers to the top of the list. Now, I have this date set, you might notice, to June 2nd of 2023. Why did I pick that date? Well, the reason I chose that date is I'm going to run a couple of back tests. Right, I could go back in time, and you can choose the dates that you choose to use, but I'm going to use June 2nd. Why? Because it was a date in our coaching group that I began to build some portfolios based on a DEW, and then the confirm call came just a few days later, about calendar week later. So that's why I'm choosing it. It also gives a good rendition of what we're doing, right, in an up market and a down market. So it's got a little of both. So it's not just a market that's gone straight up, right? We've had some volatility over the last 7 or 8 months. So that's the idea behind choosing June 2nd, right? It was a DEW up. So I have the search here. The first thing I want to do is just simply run a quick test. So the stocks from that particular day, when I run that quick test, outperforms the S&P 500. We have 9 winning. This is with no risk management techniques in place. 9 winners, 1 loser, just about 25% return over that time versus the S&P 500 comes to a 38% annualized rate of return. Okay, just a quick test, point A to point B, to give you an idea of how some of these searches work. So jot that one down. Long-term winners RS descending. There's another great one here called WorryFree Winners in our program. Created this back a long time ago. It's just high RS stocks that actually also pay a dividend. You'll see 2 of them, WorryFree Winners and then WorryFree Winners with no moving average. If you don't have ProTrader, you won't see this particular one because it does involve a moving average, but it's pretty close, pretty similar using no moving average. I'll run those search and I'll quick test the top 10 stocks from there. Again, 8 winners, 2 losers, no risk management techniques, and we're still outperforming the S&P 500. So there's your second one to jot down, WorryFree Winners, great search. Now, I'm going to venture outside of the retirement folder and take us down to ruler stocks. As many of you know, my favorite search. We're going to use that one here. I'll run the search on that date, and let's quick test those top. So again, 7 winners, just a couple of losers. LSCC was one that gapped down on us. We lost money on that one in our retirement portfolio. But overall, outperforming once again the S&P 500. So ruler stocks, another great search. As I was preparing this presentation, I did come up to the conservative folder and probably don't pay as much attention to a handful of searches in this folder as I should. And maybe after this presentation, I'll heed my own advice here. Let's look at some of these searches. These are in the conservative folder. Relative safety, again, is an important factor, and it's got all of the searches I've showed so far are either sorted by relative safety or have a relative safety parameter that must be strong here. So greater than or equal to on a 0 to 2 scale of 1.25. Let's go ahead and run that search, again, from this same time frame, and I'll quick test those stocks. Right now, we're outperformed at 9 winning trades, right? And as we talked about the investment matrix, right? You're not looking to double the move of the overall market. You're just looking to make money. And the beauty of these searches, if I scroll over a bit, so we'll see the dividend information, and they're all dividend payers. The yields aren't real high here in steady eddies, but let's go to prima donnas, another search. It's relative safety has to be above 1.25. And this one is actually sorted by dividend yield. But again, if I come back here, relative safety numbers are strong. And look at the yields that you're getting here and the dividend payouts. Let's quick test that one, right? Again, a very conservative type of portfolio, outperforming the S&P 500 and paying nice dividends. And then finally, another one of my favorites, pale blue chips, relative safety, once again, above 1.25. And then VST plus YSG is the sort. Let's quick test those. Again, outperforming with nice dividend yields, as you can see over here on the right. That's what we're looking for when we talk about analyzing safe stocks and where to find them. Okay, again, these searches may not be for the speculative investor, but they're good quality searches, and using the power of the VectorVest program to easily find those stocks that have so much information behind them, as I went through in the opening of the presentation, just to show you how important those numbers are and how easy it is to use VectorVest once those numbers are funneled in and turned into actionable information for us to use. Final thing I want to do here, actually one thing I want to do, to get Dr. D's Stock Strategy and Common Sense book, if you're new, hit the training tab along the main toolbar. And then down here on the right-hand side, you can simply download right here and you'll have access. From here, I want to go and finish up by going to the Portfolios tab. And I just want to share a few things with you here. The first thing I'm going to do is go into my RoboTrader portfolio and talk about the positions in our ruler stock portfolio. Our coaching group tracks model portfolios. We have several different portfolios that are active, but right now I just want to focus on the ruler stocks. And this is one of the reasons that propelled me to talk about relative safety again, because yes, there was some drawdown during 2022 in that bear market. You know, I emphasize in our coaching group selling covered calls, buying protected puts, being able to mitigate that drawdown. But we can look here. This one started, actually used the confirmed up call on June the 9th. This portfolio began. It's only about 7, almost 8 months old, and we're up just under 19%. There's an equity curve of that. The beauty is, you know, the drawdowns here are not brutal. And as I said, from that June, we did have big moves to the upside and to the downside. So there was a lot of volatility there. And this is using the VectorVest Profit Locker Pro risk management technique to it. If I come back to this portfolio, I show this is ruler stocks over a longer period of time, began as a back test way back here. I converted it to a portfolio, and it's performed really well. We had a big drawdown in March into April of 2022 because the Genius automatically populates the stocks. And the day after the confirmed call, the market pulled back, but we automatically populated the portfolio. In the real world, I probably wouldn't have populated that day, but protective puts, covered calls are going to minimize those drawdowns. Finally, let's run a quick back test, and we'll wrap it up here. Just to show you how to do that, if I go to build a back test, I'm going to use the DEW. I'm going to take us into automation rules up, and I'm going to take us down to the retirement portfolio, and I'm going to choose long-term winners RS descending. I'm going to use a basic trailing stop of just a 15% trail. It's a prudent stop. We are not going to close positions. We're just going to let the stop criteria liquidate the positions. We'll go to next, and no action in the downtrends. And let's set this back to that date of June the 2nd. So this is actually with our risk management techniques, just to give you an idea of how this portfolio performed. And one thing, the reason I'm doing this is so I can show you another very important number. Remember, June to now, we had some volatile markets. The max drawdown on this is 5.83% on the most basic of back tests, the most basic risk management technique. And so 25.5% gain, annualized over 39% with that drawdown of just 5.83%. And so with that, hopefully it was at least a good introduction of how you can use the power of VectorVest to analyze stock safety. Thanks for taking the time, and we'll see you next time.